If I ask you right now, what return are you getting on your money? Could you answer in 10 seconds? Most people talk about investments, very few can calculate them. They say, my rental is good, my business is profitable, this fund made 300%. But when you ask, okay, what's the real annual return? Silence. Today, I'm going to show you the simplest formula that instantly tells you whether your investment is powerful or useless. And if you want to master investing the right way, subscribe now. I publish every single day. This is a practical business and finance university. Also, there is a free investing webinar in the description. If you want to go deeper into building capital step by step, watch it after this episode. Now let's begin. My name is Ravi Gabis and welcome back to the Gabis Show, where we unlock the secrets of real wealth in the United States every single day. Yesterday, we talked about the difference between simple interest and compound interest. And today, we're gonna one level deeper. Today, I want to show you something practical, how to calculate your return. Because it doesn't matter whether we are talking about simple interest or compound interest, the foundation is the same. You must understand how to calculate return. If you don't know how to calculate return, you don't know whether your investment is good or bad. If you have big goals, dream level goals, you cannot just save money. Let's be honest, a normal supercar today costs around $400,000. And if we're talking about a Ferrari with all the bells and whistles, for example, it can easily cost $1.5 million. Now think about this. If someone earns $40,000 per year, how many years do they need to save to buy something like that? It becomes almost impossible. That's why capital is not created by saving. Capital is created through investment. Millionaires, multimillionaires, billionaires, they don't just earn money, they multiply money. And multiplication begins with one simple skill, knowing how to calculate return. So let's simplify everything. If we circle back to the money kaleidoscope, the investor axis, an investor receives return on capital. Return is always expressed in percent. And today I'll give you the simplest possible method to calculate it. Forget complicated formulas. The basic idea is extremely simple. Profit divided by investment multiplied by 100 equal return. That's it. Example 1, bank account. You invest $1,000 in a bank account. At the end of the year, you receive $50. How do you calculate return? We take profit, $50, we divide by investment, $1,000. 50 divided by 1,000 equal 0.05. Then multiply by 100. 0.05 multiplied by 100 equal 5%. Your return is 5%. That's it. Example 2, rental property. You buy a house for $250,000. It generates $3,000 per month. That's $36,000 per year. Now calculate 36,000 divided by 250,000 equal 0.144. Multiply by 100, that's 14.4% annual return. Very simple. You don't need formulas, you don't need memorization, you just need a calculator. Everyone has a smartphone today. Example 3, high return assets. Let's say you invest $35,000 into a car, maybe a Tesla, and you generate $5,000 per month renting it out. That's $60,000 per year. Now calculate 60,000 divided by 35,000 equals 1.714. Multiply by 100, that's 171% annual return. Is that realistic? If you can truly generate $5,000 per month from a $35,000 asset, yes, it is. Mathematically possible. High, yes. Impossible, no. The numbers don't lie. Now here's the key idea. It doesn't matter whether we call it ROI, ROE, ROA, the logic is the same. You always divide profit by invested capital. That's how you measure performance. Not feelings, not opinions, not marketing presentations, just numbers. Now let me connect this back to yesterday's topic. Yesterday we talked about compound interest. Compound interest is powerful, but before you even think about compound interest, you must understand basic return. If someone tells you this investment makes 30%, your first reaction should be 30% of what? And how was it calculated? Because sometimes companies show beautiful graphs. They say, in 10 years, this fund made 300%. And people think, oh, that's 30% per year. But that's not how it works. Without understanding return correctly, you can be easily misled. Today's video is not about formulas, it's about clarity. If you understand how to calculate return, you can evaluate any investment. Real estate, stocks, business, crypto, anything. And that's the foundation of financial intelligence. Tomorrow we can go deeper into compound interest again, but today the goal was simple. Learn how to calculate return. Profit divided by investment, multiplied by 100. That's it. If you cannot calculate return, you cannot build wealth. It's that simple. In this video, if this video helped you think more clearly about money, subscribe now because we build financial intelligence here step by step. And if you're serious about moving from income to real capital, go to the link in the description and watch the free investing webinar. It's completely free, but it will change how you see money. See you tomorrow.